Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Wednesday, September 15, 2010. Let's start with the main story today, the US dollar JPY, where all the talk and bluster from Japanese officials about currency intervention was not just talk, with the currency hitting a fresh 15-year high against the dollar yesterday at around 82.86. The Ministry of Finance went ahead and intervened in currency markets for the first time since 2004. The USD JPY pair jumped to the 85 level prior to the open of European trading, and then broke above that level, rising all the way to 85.76 in the New York morning trading. That was just shy of the highs we had seen in late August back here. The yen sales by Japan were unilateral, and authorities decided to intervene today because the yen's climb yesterday and overnight was due to traders' views that Prime Minister Khan wouldn't take such steps after coming off a victory in a vote for the leadership for his party, the Democratic Party of Japan. His rival, Ichiro Ozawa, had specifically called for yen sales. Khan said that the yen reached a level against the dollar we just couldn't ignore, and Japanese stocks jumped 2.3% following the news. One of Japan's top officials did indicate that the 82 level was being defended, which does invite an attack by speculators of that level once the Bank of Japan is done intervening. So now we have to see what happens next, as there is some talk that the Bank of Japan may not be done with its intervention just yet. Taking a look at some other yen pairs, here we're looking at the Euro-Japanese yen, and we see that in the last 5 sessions we had set up an upward sloping channel, but we broke out of the resistance of that channel during the intervention. Then we broke above our horizontal resistance at the 109.55 area and rallied all the way up to 111.43, which is a move of about, from low to high, of about 360 pips. Here we test the levels we haven't seen since the yen gained very strongly back on August 11th. Back then we had a support level just above where we trade now, so we'll see if we use that as resistance if we do not actually have further intervention by the Ministry of Finance. In a look at the pound-yen pair, we had been sliding downward over the past few weeks, moving in favor of the yen, and today's move breaks that trend. We see a very strong rally here, around 430 pips, as we came in around 128.50 and rose all the way to 133.70, just above our highs in late August, and bringing us to the levels we had seen during a consolidation period back here during the first half of August. If we zoom a little bit further back, we see another level of support around 134.20, so we may try to see if that line acts as resistance for this pair. But in New York trading, we see that we continue to move higher in this pair, so we aren't done just yet. Taking a look at the Australian dollar Japanese yen pair, here too we see a very strong move in favor of the Australian dollar and against the Japanese yen, and we broke above our resistance here at 79.20, which was our resistance in early August, and we see that we've moved about 100 pips higher than that level. Taking a look at a daily view of this pair, we see that now we are at the highest level we've been since about the middle of June, when a rally in the Aussie stalled at around 80.83 level. So that obviously becomes our next test, our 200 period moving average in the daily time frame. We moved above that in New York trading as we continue to see the yen weakening amid this intervention today. Taking a look at some other currency pairs, we see here the euro dollar. We had moved strongly higher yesterday as a result of both a good US retail sales report, which boosted risk appetite, and a report out by Goldman Sachs that they thought that it was likely that the Fed would do more quantitative easing this year. In today's session, for the most part, we had seen the pair consolidate its gains, but in New York trading, we see another move in favor of the euro. We had mentioned the 1.0350 level would be important, as that was a 61.8% retracement of the full downswing we had seen during August, from our highs around 1.3330 down to our low of 1.26 pretty much. And so now we have hit that 61.8% retracement, and so if we now even move above that, that targets our next Fibonacci retracement level around 1.3170. Turning to the pound dollar, here too we see a move in favor of the pound following some retracement in the overnight session. And here we break past our resistance in this pair from late August at around the 1.5580 level, and we look to target this level of resistance now at 1.5690. And this late surge in favor of or against the dollar comes as U.S. stocks opened negative following some weaker U.S. data, but stocks have paired their gains and have moved into the positive, so that's helping to boost risk sentiment and a move away from safe haven like the U.S. dollar and into riskier assets, but also higher yielding assets like the pound and Australian dollar and euro. We did have the Bank of England Governor Mervyn King hold a speech in front of labor unions, and he said that the government must push through a credible deficit-cutting plan in order to avoid the soaring borrowing costs that have afflicted some other euro area nations. So that could have worked to give a boost to the pound during the European session as well. We're going to take a look at some data, but first just wanted one last currency pair, the US dollar Canadian dollar. And here too we see pretty much consolidation, but in the New York morning trading session we see the Canadian dollar gaining. As I've said, we have had a swing in stocks in the US where they are now positive. This video is being filmed around 11 a.m. Eastern. Now we had talked about the UK. We did have the employment report for the month of August, or at least the number of people claiming unemployment benefits rose by 2.3 thousand for the month, which was an unexpected result, as that level of people claiming benefits was supposed to drop by 4.1 thousand according to expectations. The ILO unemployment rate for the 3 months through July remained at 7.8%. So this weaker than expected report, after we had a strong rise in the first half of the year in terms of UK growth, could hint at tougher times ahead, especially once government spending cuts begin to bite. So from the chart to the right, we can see that the number of people claiming unemployment benefits had been steadily dropping, but now has sort of plateaued the last several months. In the US, meanwhile, I mentioned we had two underwhelming reports. First, the New York Fed's Regional Manufacturing Survey saw the General Economic Index fall to 4.1 this month from 7.1 in August. That's the lowest reading since July of 2009. Though it does show continued expanding activity as the figure was above zero. However, it points to slower gains in output going forward than what the US had seen the last 6 months. In the chart to the right, we can see that we had very strong Empire State Manufacturing Index readings up until the last 3 months, where we now have weaker readings. Speaking of industrial output, we did have a measure of total industrial production for the month of August. We saw it rise 0.2%, weaker than forecasts, and the figure for July was also revised lower to show a gain of 0.6%, not the 1% originally reported. So overall, this is a disappointing report. The capacity utilization rate, or the number of factories currently in use, inched up to 74.7 from a downwardly revised 74.6% in July, also weaker than expectations. Putting the two reports together, it was a downer for US markets at the onset, but we see that early risk aversion has given way to higher stock gains, so that has boosted higher yielding currencies against the US dollar. Still, overall attention going forward will be focused on yen pairs at the moment and what the next steps for Japanese authorities will be. Taking a look at the upcoming fundamental docket at 5 p.m. today, the Reserve Bank of New Zealand will decide on interest rates, but it is expected to hold rates steady at 3%. We also get manufacturing PMI from New Zealand. That's followed by Japan's Tertiary Industrial Activity Index and Australian measure of inflation expectations. Overnight, Switzerland posts its industrial production. The UK releases a measure of retail sales and industrial order expectations, while the Eurozone posts its trade balance. Tomorrow at 8 a.m., the Swiss National Bank has its interest rate decision, where it is expected to hold rates at 0.25%. In the US, we get a handful of reports, including producer prices, weekly jobless claims, current account, a measure of foreign purchases of treasuries, the Philly Fed Index, as well as a speech by Treasury Secretary Tim Geithner. So that does it for today's daily video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching today's broadcast and wish you good trading.